The mortgage insurance premium allows banks to qualify you for mortgages when you have a lower down payment.
Hello, welcome to our channel. This is Juliana, your real estate expert here. I have Deb Jordan from Shamrock Home Loans with me again, and this time we are going to be discussing mass housing, a mass housing loan, right? Okay, so I have Deb Jordan with me today, and in this video Deb is going to talk to us about the advantages of using mass housing loan. So Deb, how are you today?
Good. How about yourself, Juliana?
Good. Glad to be back with you again. Yeah, so in this video we are discussing the advantages of using mass housing. Most first-time home buyers use FHA, but this is another option. Can you tell us about
Yes.
mass housing?
So I know a lot of clients, like you say, FHA seems to be a typical program we're using for first-time buyers. FHA allows for lower credit scores, allows for higher debt ratios, it allows for the 3.5% down payment. So that's the bucket that we use for a lot of clientele. Realtors, one of the first questions they'll ask me when they get a pre-approval letter with FHA, can they go conventional? Now, conventional financing is our standard loan product, would be a minimum of at least 5% down. They usually need a lower debt ratio, a better credit score, that kind of thing. But mass housing can kind of help bridge some of those gaps. So mass housing is a first-time buyer product that they did just reduce their minimum credit score required. It used to be 680 or 700 for a multifamily product. Now they're going as low as 640. So more people may be able to qualify for this loan program.
Nice.
And it's 5% down, but you may qualify depending on your income. You may qualify for the 5% as down payment assistance.
Oh, nice.
Yep. So it's actually financed as a second mortgage at a 2% interest rate over 15 years. So it makes it a good way to bridge the gap for funds needed in a transaction.
Nice.
I have a lot of clients that maybe they've saved up their down payment, but as you know, it used to be that we could ask for a seller concession towards closing costs.
Yes, but now
That's not happening
It's
so
gone.
much often, often anymore.
yes,
So clients that come to me saying, okay, I have this for down payment and it's not going to be enough for the down payment and the closing costs.
yes.
I can use a program like mass housing that can help bridge that gap.
That's excellent. That's excellent. What about the interest rates? Does it compare? Is there a difference in rates with regular conventional?
It can
and
be
mass housing?
comparable to the conventional financing. It may be slightly higher, but it's going to be helping out as they have their own mortgage insurance. So the mortgage insurance may be less than what it would have been for FHA or conventional. The mortgage insurance is PMI that would be required when you're putting less than 20% down. The mortgage insurance premium allows banks to qualify you for mortgages when you have a lower down payment.
Okay.
But their PMI is unique in that it has a coverage that protects them if they become unemployed. As long as you've had the mortgage at least 6 months and you've been paying on time, if you've gotten laid off, it's going to cover your principal and interest payment for up to 6 months.
That's awesome.
Yeah, that payment
So
protection is a great
PMI has payment protection in there.
for there specifically. None of the others.
Yes.
None of the others on a regular conventional loan
Right.
would have that.
So that means that it protects you if you are unemployed. If they pay your mortgage principal and interest for up to 6 months.
Yes.
And nobody does that.
Nobody else does that. So it's something that's a great unique asset to that loan program.
Yes.
And again, the second piece, that down payment assistance, which there's going to be an upcoming change too.
Okay.
April 19th, they're coming out with, so there's there's several different brackets of the mass housing program, depending if you're at 80% of the median income, 100% of the median income, or 135% of the median income. The 80%, that's the one that's really hard to qualify for. It means that you're making, depending on how many members in your household, because they're looking at your total household income, not just your borrower.
Okay.
But depending on the number of people in your household, if your income is, let's say, $50,000 to $60,000 a year, that's harder for somebody to qualify for a mortgage when you've got that low an income. But if I can fit you in that, the PMI is lender paid, so you don't even have that added to the payment.
Oh, that's cool.
And effective April 19th, instead of 5% down, that's going to be bumped to 10% down.
Oh, so
The down payment assistance will be helping you out with 10%.
Oh, that's exciting.
It is exciting.
Yeah.
And the third piece to that is you don't even have to necessarily. It's still going to be a lien that's got to be paid off when you sell your house, but you don't have a monthly payment on it like the other loan programs.
That's awesome.
Yeah. So your monthly payment on your primary mortgage, but you don't have that second mortgage I talked about. That's normally at a 2% rate over 15 years. If I can fit the person into the workforce advantage at 80% of the median income, then there is no monthly payment on that second mortgage.
So is there a year specification on, for example, when you sell your house, is there a limit on when you sell your house? Because some of these programs have to be in the house for 5 years, 10 years, or something.
Well, this
minimum.
One won't go away after so many years. So
it stays
on there. So yeah, you will.
So it
eventually,
doesn't matter.
Yeah, you will eventually owe that. You're still getting that money, but you won't have a monthly payment on it. So it does help make the payment lower for
the down payment assistance. So is it possible for you to go into rate 100%, or you always have to put something down?
So it's funny you asked that. So on a single family home, again, let's say it's 5% down, and then the 5% you're getting as down payment assistance, or if it's this workforce advantage with the really low income, the 10%. So you could essentially be getting 100% financing. Of course, you're still going to have to put down an earnest money deposit.
Okay.
And you still have to get your offer accepted, which is harder to do with less.
Nothing. Yeah.
But the other piece of it, like we were talking about, is the closing costs.
Okay.
Now that 10% can be divided, where you could make it 5% going towards your down payment and the rest going towards your closing costs. Even when it's the 5% down, we can do it where 3% goes towards down payment, and then the other 2 could go towards closing costs. So it gives options. So that, again, there's a program that's 100% of the median income that, again, you can get help with that 5% down. The 135% median income, I mean, that, for instance, in Worcester County, that'd be 130,000. So more people are going to fit that.
Right.
Where maybe you do 3% down instead of having to do 5% down like a regular conventional loan.
Okay.
The 100% financing that also has the down payment assistance, that would be, what is it, 101,200.
Okay.
So, I mean, more people can fit it. The difference with those other 2 programs too is it's only the borrower. So you might have a spouse that's not on the loan. We don't have to count that income. Only the first loan program at 80% we have to count that. There's all kinds of details on this loan program that we have to look at all of it in fine detail. Multifamily, you do have to have 3% of your own funds in it. And reserves.
Okay, so that with multifamily, the 3% have to be seasoned, like 2 months in there?
Right.
And then how much reserves do you have to have?
Last we saw it was 6 months reserve. So I don't know with the changes if that's going to be changing
It's
at all. But
changing.
yeah, last I saw it was 6 months reserves plus the.
So, but the good thing is you can get into it with 640 credit score. You get help with down payment assistance and possibly closing costs. And your PMI can also be helping you towards payment protection in case you are unemployed for up to 6 months.
Yes, fantastic summary.
Yeah, that's the summary of it. And this is awesome. So it will be able to help a lot of first-time home buyers
Yes.
Yeah, we want to have options for our buyers, and we have all kinds of buyers. Some need down payment assistance, some need 100% no money down, and help with closing costs. So it's great to know that this program falls within that, depending on your income. Yeah. So
Depending on your income and the debt ratio is the other thing. Looking at your income versus your debts, and we have to make sure it's affordable. So there's all kinds of pieces that your lender looks at to help qualify you. And I also work with clients to help build their credit too, to get to a point to qualify.
Okay. All right. So thank you very much, Deb. We have a lot of people that may fall into this bracket, and they will be reaching out. So if you need Deb's information, it will be in the description below. My information will also be there. Please reach out to us, call us. We are here to help you. Don't forget to like, comment, and subscribe to our channel. We bring you videos every week. And also there's a link for a free book on home buying, and get one for yourself. So thank you for coming to our channel, and bye for now.